All right, guys, good afternoon. Welcome aboard to the aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for taking the time out of your day to join me today and every afternoon, 5 p.m. Eastern Standard Time. My apologies for not getting here on time. I went to go get this, and it was really packed. Not the Starbucks, but the roads. I had a little bit of traffic coming back. They're doing construction like a block away from my house, so that sucks. I apologize for being late, but again, you can watch this at any time on a YouTube channel. Bottom right hand corner of your screen, white logo. Click on that. Turn notifications. Subscribe to our channel. Really do appreciate it. As always, hit that like button if you like it. I'm just retweeting some news. Again, always follow us at G.A.R Capital on Twitter, some news regarding Powell. So let's go ahead and insert formula. Okay. So anyways, okay, let me go ahead and take a look here. The Dow closed down 103% on a very choppy tape. We were down a lot more. Nasdaq actually eked out green. S&P pretty much flat, 0.13%. VIX was red, down 2.43%. I have it in my top right-hand corner. You can see that we're right at the 100-day moving average. Equal weight S&P up 0.43%. You can see the dollar gain. It was up nearly 1% today, over 1%, near 20-year highs. IWM 1.17%. Why? Look at the bottom right hand of my screen. You could see here. Let's go ahead and detach this. And this is my watch list that I use for options. And you could see just how many were green today. Carvana, Upstart, Roku, Shopify, DraftKings, Peloton, GameStop was up a lot higher. Palantir, Coin, Space, AMC, CGC, Football. All the high growth betas all gained today. Now you probably say to yourself, well, Carlos, how could that be? Why did that happen? More likely, it looks like a short squeeze. And I said this on the blog. I said that it looks like a short squeeze, A, which is a more likely scenario, and B, it could be some bottom fishing by traders who are looking to buy here as possibly the bottom. Now, do I think it's the bottom? No, nothing yet compelling to tell me otherwise. But again, Affirm had their earnings today. They're up 20% with a Q3 beat, extended partnership with Shopify. So something, again, the market is kind of holding on to anything in a sense. We're grasping at the straws of some kind of positive news. So again, could this be just a dead cat bounce, a short squeeze, or one of those short covering rallies? Absolutely. Again, that's where we have to see tomorrow. But the trend, guys, is still down. Keep a look at the S&P futures. You could see that 20-day moving average has been a level that everyone has been watching. And you can see broke out of it a couple times, but still kind of getting back there. 4,000 was my pivot before, and we didn't get there. So imagine here, the 20-day, again, put that 20-day on your screen. That'll kind of give you a little bit of a guide of where resistance is because we've broke a couple times, but we keep reverting down below. And you can see, guys, it's just a downward trend. Taking a look here at bonds. Bond yields came down today. TNX, you'd think good thing, right? Well, what I did see was a lot of put action on financials. I did put a position open on puts on Citibank. We got as high as 32%. I did not close, but it is for next week. Citibank right here, you could see it. Again, there is a gap to fill right at 44. We had a little bounce towards the end of the day, but with yields coming down, that's going to put more pressure on the banks because that's their margins. When they have higher rates, it's better off for the banks. Taking a look here at TLT, nice V-shaped recovery, at least on the hourly. Did we get enough to kind of break? We did break above slightly 119, then reversed back. So again, for the most part, 119 is kind of holding here as resistance. 122.56 will be your next level. Again, that'll bring rates down even lower. I do own some TLT. Gold today, down 1.5% on GLD. SLV down 3.77%. So again, not a lot of places to hide if you're looking for some safety because gold ain't it right now. You could see just the downward trend on GLD. You can see the 2-year chart. Again, kind of reverting back to that kind of same story range, 176.65 to around 165. So again, about a $10 range. Now, is this performing better than equities? Absolutely. But again, you're not getting tons of alpha either, alpha being outperforming S&P. Taking a look here at high yield credit, that was pretty flat today, pretty much in line with NASDAQ. Investment grade credit did bid today, slightly green. Russell 2000, like we talked about, all these names are part of that. GME is a big part of it. AMC, all up today, boosting Russell. Crude oil up nearly 1%, 106.63 a barrel. And you can see that here. And you could say to yourself, well, Carlos, if we're not at all-time highs, 130 a barrel in oil, why is gas prices still going up? Well, at the end of the day here, look at gasoline futures. So again, they're not exactly running in tandem with crude oil. So again, remember, gasoline still needs to be refined. So again, those costs are going up. So again, doesn't matter what oil does right now because we've been stuck in a range between 110 and 98, while gasoline futures have actually been breaking out. So again, if you have the refiners and energy, those kind of stocks, again, you're probably benefiting a little bit. Take a look here at XLE. Let's see if I have that here, XLE. Well, what I could do here is take a look at the S&P 500 heat map, and we could see that energy was pretty much a mixed bag today. CVX being up 1%, Schlumberger 0.72, ExxonMobil down about 0.5%, Apple down today, Microsoft down today, Nvidia, the big boys down today, AMD down, Google, Amazon was up today, Tesla was down, General Motors was down on a downgrade from Wells Fargo, so was Ford. Financials took a hit, like we talked about with lowering rates. Healthcare kind of defensive today, healthcare dividend paying, industrials dividend paying, energy dividend paying. But yet cyclicals did bid, interesting enough. So again, you could see cyclicals and healthcare were the leaders, but cyclicals are usually doing better in a bull market. So we're nowhere near that. Obviously, we're near a bear market. But it is interesting to see that we're starting to get a little bit of rotation, somewhat, even on a tough tape, into cyclicals. Something to watch for. Could it be some little picks there by traders who are trying to catch the bottom, possibly? Taking a look here at Bitcoin, down 2.43%, 28,485 on the future side. Ethereum below 2,000, 1919, down another 8% today. Definitely testing all the other crypto holders. I repeated this morning that I did move my Bitcoin and Ethereum to my hard wallet. Coinbase, it's just too much going on in terms of, what they're talking about, that bankruptcy stuff. I don't like that kind of talk, but I'm pretty sure it's going to be fine. But I think I like to have a little control of my coins. So again, I could use my Trezor, move it to Coinbase the day I want to sell. Takes a little bit, an extra step, but again, still, you want to just hold on, have control of your crypto that you own. Keep in mind here, tomorrow, not much in terms of news for economic data. So let's go ahead and take a look at S&P futures. I was doing the blog today, play by play as usual. We were right around 38.60. And I said 38.25, guys. That's a key level. Now we're talking about a 20% bear market. SPY is right there. SPY is right at 19.97%. Let me see. Did I get disconnected? Okay, I thought I got disconnected from my Bluetooth. But you could see we were right there, 385.15, right there. That was the level. Really a stone's throw away from that bear market. So what does that all mean? Why does it matter? Again, it's all about levels. 382.80, that gets you around 20%. That's the same number. That's a bear market at the end of the day. So again, big drawdown, 20%. That matches 2018 in terms of drawdown on SPY. In terms of QQQ, 30% would equal the actual COVID drop from 2020. Very interesting. So again, you could be kind of two schools of thought here. Either we're going to retest right here the COVID breakout, 237.07. We have a gap to fill right at 276.80, or we're gonna break and stay around that 30% drawdown level, which would kind of be equal to the other drawdowns that we've had on Qs. On SPY, 20% is a bear market, but we haven't had that since COVID either. So a lot of variables at stake here, kind of a slow meltdown, kind of a liquidity rush, anyone just trying to get some kind of cash. I stated on Twitter that if you have any of these kind of high flyer names and you do not want to own them anymore, you're just done with the volatility. You say, man, just give me something safe. That was your time to sell. I don't know if it'll continue higher. If you have Robinhood or something like that, they're up nicely today with news that, here we go, news that Fidelity Technologies discloses a 7.6% stake. And FTX founder Samuel Benjamin is the reporting person. So, up nearly 30% today, I think, after hours on Robinhood. You could see a nice pop on the stock today with a new investor. So, a lot of variables to watch. It's not as simple as, oh, we're just going to go lower. But what levels? What levels are we start to shop for stocks, Carlos? What are we doing? We haven't had the capitulation yet. We're not even in a bear market yet on SPY, so on S&P. So we possibly got a little more ways to go. In terms of ES, kind of breaking it down here, I got 38.25. That'll get us to 30. 36.64 is our 161.8 Fibonacci extension. Very, very possible. If you're saying that we're going to retest the COVID breakout, that's 33.91. That should get you to right around a 35% drawdown. That would not be a bear market. Now we're talking really, really ugly price action. They're talking about all this, guys, was about $7 trillion worth of liquidity dropped into the market. That would all be evaporated in about half a year. Is that possible? Yeah. Is it likely? That'd be pretty crazy, wouldn't it? Think about it. All right, let's go and answer some questions here. Patron Boy asks, can you look at NVIDIA for us, please, and cover the levels? Yeah, let's do that. NVIDIA I do own, and it's been a pain in the ass to own, but I've owned NVIDIA since around the 80s. I bought in, I added to the dip in around the 80s. I think I've owned it now, average cost, I want to say like around 85 or 84. So I've had it for a while. Great company to own. Unfortunately, it's just getting mowed down with anything that's regarding growth. So let's go and take a look at the weekly. Gives us a chance to kind of expand. You can see the 117.72 level. Very crucial support for NVIDIA. That looks like a pretty good buying opportunity there. Remember, as the price goes down, sometimes the stock does not get cheaper. Always understand that because it's all about price to earnings multiples. So very important to take a look at either trailing price to earnings multiples or forward, or you can always do blended. But again, I like trailing. It tells me what they have done, not what they're planning to do. 117.73 seems about right. I don't know where that PE ratio would get us to. Let me see if I can get NVIDIA here. No, not that. Let me see if I can get it here. See, economic data is not set. Let's see, tools, trade, monitor, scan, analyze, charts, tools. Thought I had analyze. Here we go. Oh, not NVIDIA. Fundamentals. Let's go to NVIDIA. This will give us our setup in terms of PE ratio. Here's earnings per share. Let's see. PE. Here, price to earnings ratio. Let's see if I can get this going. Well, I don't have it. So price to earnings is currently at 48. Still kind of rich if you think about it. Does pay out a yield, but again, it's pretty still high up there. Are you willing to pay $48 per dollar earned? Again, earnings per share, strong year-over-year growth. You could see the profitability year-over-year, pretty strong. Really just the dividend payouts kind of hurting them. But at the end of the day, it's still kind of expensive relative to the market, especially if you're looking for a deal. Do you really want to pay 48 times earnings in a high interest rate environment? That's why possibly 117 will get us that multiple a little lower and get a little cheaper. So the idea is that we want to get stuff on the cheap. We know what stocks are good. We know what quality is. I think everyone kind of has an idea what a quality company is. The question is, are we going to get the right price? Do we want to make sure we get the right price? Remember, a Ferrari is a Ferrari, but again, it's all about the price before you buy. Thoughts on Starbucks buy-in at this point? Again, you kind of have to want to wait for the dust to settle here. Again, we're starting to get back even below COVID breakout levels on the weekly for Starbucks. Now, if you want to get back to the COVID panic lows, you're talking about $57. And that's not too far away, guys. You could definitely get there. Not that wouldn't be, the craziest thing in the world if we get that. Slowdown in China, they have a lot of business in China. So again, the domestic market has been fine for Starbucks, but at the end of the day, 57.24, hey, could be something. Let's go to scan, analyze. We'll go to Starbucks, take a look at their numbers too. Let's see their current price to earnings, 19.90. So, you're getting slightly above in terms of PE in terms of the market. Market's probably trading right now probably at 17 times. 20 times could be a little rich, but are you paying for the actual premium for the name of Starbucks? Let's take a look at their numbers too. You can see here, I think I see the cash. All this is broken down here on TOS. And you can see the growth. Earnings per share, year-over-year growth, 77%. Free cash flow, 70%. 18.82% sales per share. Return on equity, 62%. These are strong numbers, guys. Starbucks is a good company. The problem is that they are basically getting washed away in the storm, especially with anything regarding to China. They're going to get taken a hit. They're digging where the woodshed. I like Starbucks long term, but again, you're going to have to just wait it out. That's pretty much it. If you're a believer in the company, I am. I buy a lot of Starbucks. I think Starbucks is a great company to own, but the idea is that do we want a good price? And that's what we're going to do. We're going to take a look for a good price before we start shopping. Again, we want a good price relative to earnings because our dollars are worth more. Remember that. Scarcity of money. Our dollars are worth more today. So we have to be a little more picky on what we are buying with our hard earned money. I think you guys would agree. So the giant reprice continues. All right, guys, have a great rest of your afternoon. I'll catch you guys tomorrow for the morning note. Cheers.